Here's the honest answer on whether buying pre-construction in Miami is risky. It depends entirely on what you're doing with the money and what do you expect in return. In this video, we're going over the real risk of buying pre-construction in Miami right now. The ones nobody in a sales gallery is going to walk you through, and I'm going to use a project I've talked about on this channel before, palm tree residences, as a real-world example throughout. Not to sell you on it, but to show you what the risk conversion actually looks like when you apply it to a specific deal. I'm Jaime Cristancho, a Miami real estate agent. I work with buyers and investors relocating here, and this question, is pre-construction risky, comes up nearly every conversation I have. And my answer is always the same. Risk is not a yes or no question. It's a framework. What's risky for one buyer is a completely reasonable move for another. Let's break it down honestly. Let's start by assessing pre-construction in Miami as honestly as possible. Miami's pre-construction market in 2026 is strong and at the top, and uneven in the middle. In the luxury and branded segment, pre-construction has outperformed resales decisively. Contracts signed at launch have been running 12 to 8% above initial pricing, headlining into closings, and that's held consistently through 2025 and into Q1 of this year. Branded residences specifically have appreciated at roughly 12 to 15% compounded annually from 2020 through 2025, compared to 9 to 12% for comparable non-branded luxury products. Resale velocity is faster, price resilience in softer markets is stronger, and demand for international buyers, who represent about 86% of the pre-construction buyer pool from Latin America alone, has been consistent and growing. That's the upside picture. Here's the part the sales gallery doesn't put in a brochure. The downtown Miami Central Business District submarket heading into 2026 was tracking approximately 24 months of condo supply with nearly 4,300 new units in the construction pipeline against an existing base of roughly 10,200 units. Some analysts have described that as an approaching distressed buyer market territory. Mid-market product, which is non-branded with a generic layout and no differentiated lifestyle offering, is feeling price pressure as supply builds. Not every pre-construction project in Miami is going to perform the same way, and if you're buying in a sub-market that's getting crowded with similar products, the math looks very different than if you're buying into a project that creates its own demand category. The most important pre-construction question you can ask is this: does this project create its own demand category? Palm Tree Residences is a great example of this. This is a 37-story, 483-unit branded tower in downtown Miami's entertainment district. Developed by PMG in partnership with Kygo and Palm Tree Crew, junior suites start at around $500,000, and then the 3 bedrooms go up to $1.6 million, and a penthouse collection that runs up to $3.4 million. Short-term rentals are permitted. Delivery is projected for late 2029. The deposit structure is 10% at contract, 10% 6 months afterwards, 10% at groundbreak in Q2 of 2027, and your last 10% a year after that, and 60% at closing. Now, is buying into this project risky? Let's walk through their actual risk categories. The first risk we're going to go over is construction risk. Will this building actually get built? This is the fear most buyers don't say out loud. The answer depends mostly entirely on the developer. PMG is not a speculative operation. They have the Waldorf Astoria supertall actively under construction a few blocks away, currently past the 60th floor. They delivered the 11 club, hotel, and residences, which was 100% sold, and now in the closing phase. Their track record in this specific submarket is live and visible. You can drive to it right now all over Miami and New York City. In addition, PMG joined forces with Sterling Capital from New York City, Eden Residential, and Leon Development Group to get this job done. A smaller or less capitalized developer on a boutique project is a different risk profile entirely. PMG has a $668 million construction loan for the Waldorf Astoria, Miami alone. That is institutional capital with real oversight. The risk of palm tree residences not getting built is materially lower than the risk of a boutique project from a first-time developer. Risk number 2, deposit risks. What happens to your money if something goes wrong? Florida law is actually well constructed around this. Under the Florida statute 718.202, all pre-construction condo deposits must be held in a third-party escrow account, a bank, title company, or law firm, not in the developer's operating account. The first 10% is protected completely. For the deposits above 10%, the developer can only access those funds for actual construction costs if the contract explicitly says so and you acknowledge at signing. If a developer violates the escrow rules, you can void the contract and recover all deposits with interests. If the project fails to deliver within the contract's outside date, the deadline written into the purchase agreement, you're entitled for a full refund. This is not bulletproof. A developer who is genuinely insolvent creates complications, but it is meaningfully better protection than buying pre-construction in most other states or countries. Read your contract, know who your escrow agent is, know your outside date, and have a real estate attorney review the agreement before the 15-day rescission period closes. And really quickly, before we move forward, if you're using this video as part of your research on whether moving to Miami is the right move at all, I put together a free resource for you called the Miami Relocation Survival Guide. Inside includes information on the top Miami neighborhoods, every price point, the honest pros and cons for each, and so much more. The link is in the description. And getting into risk number 3, market risk. What if values drop between now and when you close in 2029? This is the risk that is hardest to hedge and the one most buyers underestimate when the market feels strong. You're locking in today's price on a unit that won't close for 3 years. If the market corrects between now and delivery, you may close on an asset worth less than what you're contracted for. This happened in Miami before. The 2008 cycle hit pre-construction buyers who had signed in 2005 and 2006 particularly hard, with some projects delivering into a market 30 to 40% below contract price. Now, the structural drivers today are different. Foreign capital inflows are more diversified, demand is more end user than speculative, and the no income state tax migration thesis hasn't reversed. But the honest answer is nobody knows where prices will be in 2029. Anyone who tells you otherwise is selling you something. The mitigation here is buying a project with genuine differentiation, something that isn't competing on price alone against 30 identical towers at delivery. Palm tree residences with an actual operating entertainment brand and over 57,000 square feet of curated amenities, a ground floor music venue, and short-term rental flexibility in a live entertainment district has a different resale story than a generic high-rise at the same price point. That's not a guarantee, it's a better position. Risk number 4, brand risk. What if the brand does not deliver on its promise? This is the risk that's specific to branded residences, and it's real. Analysis of branded residence resales in Miami from 2021 through 2025 shows that 68% resold at above initial pre-construction price, but 20% resold below. Among the underperformers were some Trump branded properties after the brand's reputation shifted, and early generation W residences where the hospitality operator did not consistently execute. Brand permanence matters. A brand that changes ownership, loses cultural relevance, or fails to deliver the promised programming during your hold period introduces a risk that a non-branded building simply does not carry. Palm Tree Crew is not a legacy hospitality brand with decades of residential track record. The Waldorf Astoria is, Delano is, the Four Seasons is, Palm Tree Crew is a global music and lifestyle brand making its first residential play. The question isn't whether the concept is compelling, it clearly is. The question is whether the lifestyle delivery holds up to the 10 to 15 years of potential ownership. That's a judgment call only you can make based on your assessment of the brand's trajectory and your investment horizon. So So back to where we started. Is buying pre-construction in Miami risky in 2026? Yes, everything in real estate carries risk. The more honest question is the risk appropriate for your situation, your timeline, your capital position, and what you actually expect to get out of this purchase? If you're a long hold buyer or end user with liquid capital buying from a proven developer like PMG into a differentiated branded project in a location with genuine long-term demand drivers, that is a calculated risk with real upside. Pre-construction in Miami's luxury segment has outperformed broadly for 5 years straight. That doesn't mean it always will, but the structural case is not thin. If you're a speculative short-term buyer planning to flip your contract before closing, or you're stretching out your liquidity to meet the deposit schedule, or you're buying generic product in an oversupplied submarket expecting someone else to take it out of your hands at a premium in 3 years, that's a different risk profile entirely. The framework is this: pre-construction rewards buyers who go in with clear eyes, the right time horizon, the right capital structure, and a project that earns its position in the market. Palm Tree Residences may be one of the best pre-construction opportunities in downtown Miami entertainment districts right now. It may also be a brand that hasn't yet proven it can sustain a residential lifestyle delivery over a decade. Both of those things are true simultaneously. Where you land on that question comes down to your perspective on the investment, which is exactly where we started. And if you made it this far and you'd like to purchase pre-construction here in Miami, make sure to reach out on the details below.